No, here we're looking at Apple, and we got a bounce off the range. Now, this was not a big surprise to me because we talked about this before that we were near this important line. We felt that we were going to see this go into the 124. I said that could be some support. So that the day we hit 124. 50, I mean 48. So basically, really right there. And this is where we had important lows in the past. You could see this right here. So it made sense if we were really going to see the line in the sand, it was going to be here. And we saw the market was a little overdone. I mean, keep in mind, we really saw a very dramatic move. And when you're looking at this, this is what's really important to pay attention to. Is you can see this in an uptrend here. This is still in an uptrend. So even though it's a big correction action, you're seeing the NASDAQ Composite Index, and keep in mind this is a big part of the NASDAQ Composite Index. So when the NASDAQ is overextended, this means this may be overextended, and it's going to make the bounce here. Now again, this is still not a great situation because we really don't want to be in this downtrend that it's been showing the influence on. So I'm not going to play a rosy picture there that it's having this fabulous move. It's that it's been really holding that midpoint also. So, it's been a little concern, but I did think that we would at least get a little bit of a bounce into the range closer to where we initiated. We'll see how it starts to trade there. Our concern at the time when I started talking about it the last several days when we initiated this trade, it was going to be, hey, we're really breaking to the upside or we're not. And we could see that overall the market was not going to do much of that. We saw a little bit continuation with Facebook. With my with my with the new the webinar that we're going to do, I'm going to be really highlighting Facebook, and those who take the course will see exactly why I felt that Facebook would continue as opposed to this. Maybe, kind of a trade situation may not work, but I knew that Facebook had to go where it went, and that's part of, of some of the methods I'll be showing, and it's going to be in an upcoming book of mine coming soon. I have a lot of hopefully a lot of so far I have a lot of analysts will be taking a look at that, and hopefully they will like what they see. It's going to be based on the 1929 crash and the 37 crash and all the major crashes in history, and look a real firm look at it. And quite honestly, when you see it, I think people are going to be a little surprised because I don't really get into that kind of level here because just the kind of the format. In fairness, we'd lose a lot of people, and that might not be what they're into, but because they're looking for trading ideas and just where is the market moving. But it's, I think, a very interesting book for those that are interested in a more technical viewpoint of the markets, and also looking at how math works in the marketplace. Anyway. So when that video, when our session comes, that will show why the difference between the two. Because I think the normal thought would be, okay, well, Facebook's a big leader too, and how come, that continued and we saw this really break? Well, the main point is two. The one I won't discuss here, but the other factor is that there's a heavier implication or a weight associated with Apple than Facebook at this time because they've accumulated to the same degree, so it doesn't follow as closely. That's a better answer for now, and then you'll see exactly why, and I think it'll make a lot of sense to everybody. Anyway, we should see this try to bounce back up into the 127. I still think 127 is going to be a very tough road to break. If it does, then we might have a better bias to the upside. We'll watch to see over the next couple days. But look at this pretty big momentum to the downside. I'm getting my concerns here because I'm really concerned about the overall markets. And I think Apple could really, although it's a great stock and normally, it would make sense to be buying these dips, we could be looking for some problems. It could be having some problems if we break through this 120, 121 level. I think that would really be signaling some further issues for Apple in the overall markets. But on the short term, we're a little overextended. We'll probably make a little more of a bounce, but you could see wasn't much of one today, wasn't able to really bounce back up. And so this is going to be one of those that may not get that far up. So keep that in mind.